Greenwood Stocks coming at you, market recap and hot stocks to watch. So just jumping right into this, GOGO, we saw the potential for this to be a big run today. And of course, I look mainly at the 5-minute and the daily, just to let you know. If you go back, you see no volume. Well, you see some volume, but almost no volume. So whenever we see volume spikes, then that are above the previous day, like you see we got 700,000 shares in the first 5 minutes of the day when we're averaging 800,000 shares. So that's always a good indicator of where the stock is going to go, because where volume goes, the price goes. So just keep that in mind whenever you're trading. Yes, it can pull back, but it's a good indicator of price if you can look at volume and see the relative volume increasing more and more. So we drew trend lines here. You see 1450 was one of the other long-term resistances. And when we go back, that's where I drew it right here. You see this resistance here? It had trouble getting above 1450 many times before. So whenever it does break, then you can be confident that the stock is going to make a real move. And so the next resistance we seen was at 1550. And so now, once it hits 1775 and closes above these resistance levels, then you have a good opportunity to continue to trade a breakout. We actually were up 180% on calls. So excited about that, but we definitely want to let it run. We always recommend taking profits, but every now and then you want to try to maximize, and if you can limit your risk, your downside, allow some of your runners to run. So like I said, GOGO, it is a holding company. SPACs are in play right now, along with OPAD, along with IRNT. Was that it? IRNT? Yeah, IronNet. And all these holding companies, SPACs companies, pay attention to these because that's the hot sector right now. So mergers and acquisitions are back, just like the SPACs were about a year ago when everybody was going SPAC crazy. So again, we have to pay attention to trends. And I'll briefly go over the option trade. Basically, you have a option spread, an option table that shows you exactly what you're buying, what the strike price is, what the date is, what the bid, what the ask, the time decay, which is theta, and the rate of increase for each dollar, which is a delta, and then the gamma is the rate of increase. How much does it continue to increase once the stock starts to move in a favorable direction? So it probably doesn't make sense to you, but we will be adding an option course to our education list. So stay tuned. It should be ready this week. And again, if you're looking at just buying options, you want to get the most bang for your buck. So sometimes people are more patient. The longer you go out, the more expensive it is, because it's giving you more time for that stock to move and hit your strike price and make you money. But if you go closer, then the cheaper they get, but guess what? You have less amount of time for that stock to make a move before the stock expires worthless. And it has to be close to hitting that strike price, or your options are worthless. So just wanted to kind of give you that. And I like to play out of the money calls as much as I can. So if we got a stock that's $16, it was 14, I bought $20 calls. And so what that means is if it hits a $20 strike price, you can exercise that option, meaning you can buy 100 shares per contract, or you can actually just sell the options on the open market for the value that they're worth. So I never exercise. I always sell. If I pay 10 cents for a call and now the call is 75 cents, then I'm going to want to just sell that for 700% profit instead of buying the equity. It's just simpler that way. So anyway, I just wanted to kind of go over that. There's a couple of more, not too much going on. SNOA got some big news, but again, I always say, look at the history of what stocks did. You see the stock has a history of popping and dropping, popping, dropping, popping, dropping, popping, dropping. And so it'll be a good idea to bet against this stock. Once you get a big move, it's probably not going to hold. And CEI with energy running, and you know, we're looking at breakout levels now, but with energy running, you're able to gauge what stocks can do exactly what you think they should do. Okay, so we were looking at Chevron, CVX. I know I'm going fast. Just wanted to cover some basics. Oil right now is trending at $75 a barrel. And so we understand that a lot of traders say they're technical, a lot of traders say they're fundamental, but you have to have a mix of both because the technicals reflect the fundamentals. And if the fundamentals are bad, then even a good technically set up play may be the detriment of your trade. So when you see $90 oil and oil at all-time 3-year highs, then you know oil stocks are probably going to run. So that's in our product, that's in our book, and it's called sector identification. You have to identify what sector is hot. So with crude being $74, just a few months ago, it was in the 50s, you know that oil stocks should start heating up. And so didn't have a whole lot tonight to share. Just wanted to kind of go over some things, and I will go over a support and resistance play. Chevron, we wanted to play options here. So we did get some weeklies, and I believe I got the October 8th with the $109 strike price. So that would be putting us paying about 25 cents. And as you see, it's about the same because the stock didn't move. But again, if you look at the delta, the gamma, the options, the option Greeks, you see how much you can expect to win whenever a stock moves up, down, or just stays sideways. So wanted to play these. The trade didn't work out exactly like we wanted it to, but the only good thing is it did hold some support. So again, we talk about trading channels: bottom channel, top channel, bottom channel, top channel. If you see a trend or an area that the stock likes to go to, you can buy on the bottom and then expect that to go where it's been going in the past. So that's pretty much all I have. There's one more. Alf looks like it's trying to make a move. So it's been getting a lot of buzz on social media. And again, you see the volume pick up, but again, nothing is guaranteed. I just want you to understand you should be buying at lows and buying on dips. If you buy the highs, you know, at $8, then you're subject to a pullback. So if you buy on these dips, you can scalp them, you can go long, but either way, when you're buying on these dips, it saves you money and it makes you more money when the stock does what you think it should do. A couple more that ran DATs, and you can look at UNFI that possibly may have a continuation. So with that being said, we will let Intrinsic take over and share with us what he is looking at trading and some of his philosophy as well.
Yes, so the one play I've been accumulating this week for a longer term swing is symbol MKD, Molecular Data Incorporated. And so the main thing that caught my attention about this play is that right here around 27, 28 cents, it's established strong support. And so as you can see, it's trading in a really tight channel right now. It'll go up, you know, move above the moving average, come back down, but it's steady holding support, and it keeps trading, you know, above average volume spikes on certain days. So that's kind of my thing. It looks like a really low risk, high reward. And another thing that I think about a lot too is that I believe NASDAQ stocks under $1 are pretty much at some point gonna run. And with this establishing support and continuing to hold, I just think it's a super low risk, high reward. And with it being so cheap, I mean, you can get a good ROI once it does break out. Because from the look of things, to me, the breakout is imminent. Because I mean, it's trading this tight channel, but at the same time, as volume keeps coming in, I feel like at some point, you know, it's going to go ahead and break out. And And the third thing too that really made me think it was a good play is institutions are holding it. So for me, anything under $1, if I see institutions holding, I mean, it's just another sign of confirmation. That's a low risk, high reward. Because I mean, you always want to, roll with the smart money if you can. But yeah, right now that's my biggest play that I'm watching. I'm accumulating. Like I said, I'm looking for a breakout either this week, sometime next week. So that's all I got.
Sounds good. All right, so like I said, again, in this market, buy dips. Make sure that you are definitely being smart about what you're doing. Again, it's choppy, and you just know that different fundamental aspects of the global economy is making things unstable. So the bond market is going higher. People are anticipating the Fed's raising rates at some point. Not only that, a lot of stock prices are at an all-time high. So that's going to factor into the market being choppy, being indecisive, and whatever you're buying normally can be overpriced. So you just have to be sure you're getting deals, discounts, buying dips, et cetera, et cetera. So that's pretty much it. We have lots more coming. We'll be back on Thursday for the market recap. If you need coaching, if you need one-on-ones, email us at greenwoodstocktrading@gmail.com. Subscribe to the channel. Hit the bell icon button if you want to know whenever we post. And join our Discord as well. Our Twitter, link in the description for the Twitter, for Facebook, and all of our social media. We also have our trading cell. So give us a shout if we can help you. Have a good one. God bless.